Economist Kelvin Chisanga has highlighted the impact of the recent policy rate adjustment to 14.5% following a 0.5 percentage point increase, saying this will have a ripple effect on the economy. He explains that this rise will directly affect financial services and solutions, leading to higher costs for businesses and consumers alike. The Economist has noted that the 50 basis point increase will not only impact new loans but also existing ones, as interest rates on current borrowings will be adjusted accordingly. He warns that this could make loan repayments more expensive, affecting both businesses and individuals who rely on credit. Mr. Tsanga also says with regards to business activity, the rate hike will trigger strong transmission mechanisms, ultimately causing a pass-through effect on commodities and essential goods. He says as borrowing costs rise, businesses may face increased operational expenses, which could in turn be passed on to consumers. He has pointed out that in the long term, government securities may become more attractive due to potentially higher returns, offering some stability amid the financial adjustments.
Cost of credit basket is shaking up from that point, meaning we are now able to see how the situation is. One, will affect the overall economic factors, meaning we won't be able to record the growth as it stands, because the banking sector will be able now to respond to what is happening. And by so doing, individual banks have to buff up their reserves, meaning they have to match up that. Meaning what we are seeing overall in the economy is that we are now shrinking the credit basket. And this will have now a very strong telling effect into what we are basically able to see, which should have been then help Zambia to change some of the narrative. Already, we have a very bad shape around capital formation, and having this situation sitting so strong in this case brings about a total distortion in the market, meaning even the aspect of contracting loans outside the policy can also be triggered from there, meaning people can go out there and look for cheaper source of money into this situation. I expect when we know that we are at a point where we need to balance up many actors, and to maybe a central bank, again, they also see that this comes into disturb the financial structure that need to be there to help lubricate production and drive economic growth from there.